today's video, we are going to be discussing one of the most important concepts in trading psychology, and that's having a clear mechanical trading plan that you can execute on in the market. Now you may be asking the question, why is a clear mechanical trading plan essential for a good psychology? Well, at the end of the day, your trading plan is going to be your guide, your checklist when you go into the market. If you have no structure, you've got nothing to look for, and you're overwhelmed by the market and you're overwhelmed by the amount of setups you've seen in the past, then trading is going to be incredibly stressful. But if you have a very clear, succinct trading plan that lists step by step exactly what it is you need to do in the market, a lot of the stress dissipates. You're not run by fear and greed anymore. And because you have a consistent plan to execute on, you can start to build consistent profitability as a trader. I think it's for this reason that pilots, for example, and surgeons use checklists. It's for this reason that they have their protocol written out and they follow them step by step. And it's no different for traders. In this particular masterclass, we're going to be talking about the science behind a perfect trading plan. I'm going to be giving you my template. I'm going to be giving you my insights on what I've seen over the last 7 years of my own trading journey. What is it that goes into making the perfect trading plan? Now, in the 12-week program, I have a trading plan audit. So every single one of the students who go through the trading plan, if they would like to, they can send through their trading plan. I'm going to review it and give some feedback on it. So I've seen common mistakes, I've seen common challenges that hold traders back in their trading plan. We're going to debunk some of those mistakes today, and we're going to talk about how you can construct the perfect trading plan to ensure you're going to the market and executing with as little emotion as possible, with as little stress as possible, and you're ultimately building consistent profitability as a trader. The big problem here that we're addressing are the common trading plan mistakes. And we're going to run through each of these mistakes now, but wait till the end. I'm going to give you a completely free template that you can download and you can use for your trading, so you can construct your trading plan just like other seven-figure traders do. So I've had the opportunity to work with a lot of them, and I see the commonalities between their trading plans and what they put in their trading plans and what they leave out their trading plans. And believe it or not, there are key differences between those traders, the successful seven-figure ones, and those who aren't very successful, that I'm going to outline in this particular masterclass. The first problem, or the first mistake, is not having a trading plan whatsoever. So if you are a trader who's going into the market and not trading with your trading plan, you can't expect consistent results, because consistent profitability and consistent results come from the consistent execution of a trading plan. If we're going to the market and trading based on how we feel every time we're in the market, we're going to be executing slightly different. We're going to be executing with different levels of variance and different emotional state. So we can't then expect consistent results because we're not consistently executing on an edge. So the first mistake that I see traders fall into is they don't have a trading plan, or they don't have a mechanical system. Their systems are too discretionary. And we're going to start off by talking about this because this is one of the key and biggest mistakes that I see with trading plans. The second thing is traders put too much information in their trading plan. They overwhelm their trading plan, and as a result, they overwhelm themselves in the market. Your trading plan's a guide, it's a checklist. It's something that you can quickly look at and quickly go back to when you're in the heat of the market to make quick decisions. If there's a lot of information there, you're going to be overwhelmed and you're going to be run by emotion as opposed to run by a simple process. And thirdly, they're keeping their trading plans too general. They don't go into specific detail about what they look for, but rather they keep general rules in trading because maybe they don't understand their system well enough, or they've just taken their mentor's trading plan. They haven't gone into that system deep enough and pinpointed the abstractions, and they haven't pinpointed the key points and the key nuances of the strategy that are essential to know to build consistent profitability. So this is the third mistake we're going to talk about. Okay. Now, mistake number one is no trading plan, or too discretionary of a trading plan. You cannot expect consistent results without the consistent execution of an edge. Okay? Now, how can you expect consistent execution of your edge if every time you come to the market you're executing differently? You've got no trading plan to guide you in your decision making. You've got no mechanics and no checklist to guide you in your decision making. So if you don't already have a trading plan, or your trading plan is too discretionary, I hope this video is a catalyst to at least put your system down onto a piece of paper and create a checklist from a step-by-step process. Now, some of you may have been following your checklist for so long that you know your checklist like the back of your hand, and your thought process is mechanical when you come to the market. That's fine. It doesn't mean you have to have your trading plan right next to you every time you come to the market, but the trading plan is great there, especially in the early stages, to facilitate the right type of step-by-step thinking and mechanical thinking as a trader. Now, there will always be slight levels of discretion. We can't account for absolutely everything. But if we take majority of the discretion out of our trading, what that does is it frees us up in the market to make those quick decisions that we need to make on occasion. But you're putting yourself in the best possible position to succeed if 95% of your decision making is already mechanical and created in a step-by-step checklist. Having a mechanical trading plan is essential for consistent profitability. Why? Because the mechanical system is what allows you to come to the market and execute with as little variance in your decision making as possible. And that tight variance and similar decisions and consistency in your decisions over a large sample space is ultimately what leads to consistent profitability. Now, the second mistake is information overload, having too much information in your trading plan. Overloading your trading plan will overwhelm you in the real market. It'll mean that every time you come to the market, you are overwhelmed with so much information, sometimes contradictory information, that you don't know what to do. Now, what I suggest to my students in the 12-week program is that they have two trading plans. They've got one playbook, which is where they put all their information, all the setups they have, all the management setups they have, all the risk management setups they have. But then from that playbook, you have to develop a trading plan, a simple step-by-step checklist plan with simple rules, with checklists and simple pictures that creates a system and creates a guide, a little map for you when you're in the market. There are so many different types of decisions you can make in the market. The trading plan is there to guide you in making the most profitable, consistent decisions over a large sample space. So if you have a lot of trading information, like I know a lot of you are very knowledgeable and you have a lot of different systems, a lot of different ideas, put that into a trading playbook. And then from that playbook, construct a trading plan or multiple trading plans, but ensure those trading plans in of themselves are simple and they allow you to execute in the market with as little variance as possible. A trading plan should be succinct with just the crucial information on your entry, your management, and your risk, or your entry, your exit, and your risk. Those are the only three things you really need in a trading plan. Create a mechanical trading plan with a checklist for your entries, management, and risk. And again, I'm going to give you my own template for this at the end of this video. Now, mistake number 3 is general trading information. Traders use general information to try and cover up for their lack of knowledge. Usually traders just take a trading plan from their mentor, which is general, and they haven't gone in and found the nuances for the strategy. They haven't found the way they personally like to execute that strategy in the market. And what I encourage is every trader is they spend time testing their system and they spend time executing that system and they spend time open and aware to refinements of their system so they can mold that system to best suit their personality and to best meet their risk needs and to best meet the way they like to execute as a trader. And that way you're going to have specific information on the way you like to execute in the market and what you love to see in the market before you put risk on. Ensure your trading plan is specific and precise so you know exactly what you're doing in every stage of the trade. You know exactly how you're entering, you know exactly how you're managing your position and exiting, and you know how much you're risking in certain situations in your trading. This is going to be a specific trading plan for you that resonates with you and that you can sustain into the future. Okay? Now, the keys here to a successful trading plan, we've elaborated on some of them, but there are, just to summarize them here. A simple yet precise trading plan that is in checklist form, outlining your specific rules for entry, exit, and risk. That is the key to a successful trading plan. A simple yet precise plan that is in checklist form, mechanical, outlining your specific entries, your specific exits, and your specific risk rules. Note, like I mentioned, you can have another larger trading playbook that you use to dump additional trading information, but the plan you bring to the market should be succinct, simple, simplified, and step-by-step. Okay, now I want to give you my trading plan template. This is a template that you can download in the description below. Just go and click the link and you'll have that template completely free. And what I'm going to do is I'm going to bring it up on my computer now to show you what to do with it. Now, each of you will have this on your web browser, and on the top right, you can just go and click duplicate this template, and it's just going to make a copy to your own Notion dashboard. And what I've done is I've outlined the 3 most important parts of your trading plan: an entry, an exit, and a risk. And each of these components you want to break down into further detail. You want to know your area of value for your entry. What are the higher time frames? What are you looking for in the higher time frames to give you an indication of good area of value? Like I mentioned, you want to have a simple rule, you want to have a checklist, and you want to have a picture to train the visual part of your mind to recognize patterns. Then once we're in that area of value, you then go down to lower time frames to have a look at entry criteria. And this is a lower time frame. What are the specific rules? Create a checklist of the specific things you would love to see in the market before you execute, and then add a picture as well. And then for your exit, where do you put your stop loss initially? Okay, insert a simple rule, insert checklist, insert a picture, and then you break even, so on and so forth. And then finally at the end, you got your risk management. What are the simple risk rules you put in place to manage your risk as a trader? Now, this template is very easy to go in there and fill in. You just need to copy and paste your stuff into this. Make sure you fill it into the template, because the template has each of the components you need to ensure you have a mechanical trading plan that covers the things you need to see in the market: entry, exit, and risk. You just need to fill it out with your specific information that resonates with you. And this is ultimately going to help you come to the market and execute consistently with as little variance in the market, which is ultimately what's going to lead to consistent profitability. Okay, now if you found this valuable and you know other traders are going to benefit from this type of information, please send it through to them, share it in your trading communities, like, comment, subscribe, all that type of stuff that helps me grow, and this helps this type of information get out there. So thank you so much for watching. I look forward to seeing you all in the next video.